For auto pay and e-billing, taxes, fees, and other third-party charges will apply. See website for additional details.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy. But important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost. All you have to do is call 800-393-4001. The title, again, is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
First day of May here on the Financial Exchange. It is Chuck, Mike, and Tucker with you. And as we look back on April, we've got a bunch of economic data, a bunch of earnings to get to. But I do want to look back on April a little bit just to talk about what we saw in markets. Because overall, pretty calm month. The S&P 500 ended down 0.7% for the month. The Russell 1000 down 0.6%. Russell 2000 down 2.3%. The Bloomberg Aggregate Bond Index was up 0.4%. And so overall, just another calm month in markets, not too much to get excited about, and we're on to the next one.
Yeah, not quite.
It's kind of wild.
It's funny where you start and end at the same place, but have a whole lot of wild in between.
This is why I tell people that the path matters. When people give their year-end S&P 500 forecasts, it's not just, okay, so the S&P is going to make 8%, it's going to make, 0.75% each month and blah, blah, blah. The path actually matters, and the path of April was nothing close to calm. It was, some of the most volatile trading that we have ever seen in markets, actually. So it clearly raises the question of, markets tend to, it's one of the things you hear about markets is that they are forward-looking. And so the question is, hey, given where stocks are now, with the market up an additional 2/3 to 1.5% today, depending on the index that you're looking at, are markets signaling not quite the all clear, but hey, everything's going to be fine? And is that true, or are they missing something? And the answer is, we have no idea. Markets take into account all the information they have, and some of that information ends up being right, some of it ends up being wrong. But the reason that you have high levels of volatility is because markets priced information incorrectly one way or another. You look at what we saw heading into April, markets did not price in that the stated tariff rates would be as high as they ended up being. By April 9th, markets were not pricing in a pivot to pull back from some of those tariff rates. And now, because of how, investors may have been positioned, you've kind of had this exacerbated with, a short squeeze to the upside potentially. And markets have, rebounded pretty much back to where they were. I mean, again, I'm looking at the chart right now of the S&P 500, and you're at, 5621. The last time we were at this level was on April 2nd before the Rose Garden announcement for tariffs. So markets today are pretty much saying nothing from the last month mattered.
Which is, I think, surprising in both our minds, because it did matter. Just from every practical effect other than on markets, it mattered quite a bit that we had an announcement of reciprocal tariffs that would have increased the average effective tariff. Did we actually do that math? The average effective tariff rate had those stayed in place?
We didn't do the math, but a number of other people did that had it pushed up to north of 25% for the average effective tariff rate. And at one point, I think it even got close to like 30 as things were changing, which would have been like the highest tariff rate since the 1890s, I believe.
So there's plenty of things that are different than April 1st on May 1st when it comes to our expectations about the economy and tariffs. But let's talk about what is actually today different. Forget about expectations, but what's actually different today in terms of things that matter for the stock market now than on April 1st. One would be the China tariffs. Those are in place at a rate of 145%. They were not there on April 1st, and that is a big difference between what was going on a month ago compared to today.
Yeah, and so obviously, look, in terms of what that means for the real economy and for the stock market, look, you have a bunch of stuff that's not being shipped out of China right now. You have other stuff that's just being routed through other countries as they try to skirt tariffs. You have companies trying to shift production to other countries. That pushes costs up because of capacity constraints there. It's not like you can just go to Vietnam and be like, hey, give us your spare factories that are perfectly tooled for what we need to make. It doesn't work like that. In fact, a lot of times what you see is, okay, Vietnam then orders the product from China. It gets shipped to Vietnam, and they do like some kind of finishing and then ship it on to the U.S. So there's a lot of messiness that is out there, and I think the big thing that I come back to is none of us know exactly what's going on behind the scenes with all of this as far as how individual companies are dealing with these challenges. But anytime that you are having to adapt here, it's not likely that you are coming away with lower cost and higher margins, given that everyone else is trying to adapt at the same time.
True.
And so I think what I find interesting about it is, hey, even knowing that now, the stock market's basically saying, yeah, we think you're in the clear. And it may be right, it may not. Mm-hmm. I tend to think that it's overlooking some things, but I've been wrong before, and maybe I'm wrong this time. But you have, a whole bunch of different companies that are now, basically scrapping and clawing for any kind of production they can get anywhere other than China. And I can't believe that that's going to, in the short term, result in better outcomes for those companies, even if in the long term, it certainly is something that I think we want to do in terms of encouraging production to move away from China. And I think that is absolutely a goal of the Trump administration.
Second piece, in addition to China, that we didn't know on April 1 that we know now, pretty much every country in the world that imports something to the United States is now facing a 10% tariff on those products coming into the U.S.
Which I think was kind of the thought as to where, I think that's what markets were pricing in as, hey, this is where we think things are going to be, after April 2nd. So I don't know that it resolved the uncertainty there, and certainly, you have the potential for negotiations with individual countries to get improved deals. There have been a number of those, talked about in the last couple of weeks, but we still don't have anything that is across the finish line, even though, this week there's been some more chatter about deals getting closer, but there's still nothing there.
Yeah. So, optimistic case, you do have a slew of announcements on trade deals with countries other than China. Frankly, I don't think you're going to hear a whole lot on China in the very short term, but I could be wrong. And what that would do, like right now, put yourself in Tim Cook's shoes at Apple, and I keep doing this, which is probably not the best example.
What kind of shoes do you think Tim Cook wears?
Hoka's? Is that what they are?
Yeah, the running shoes.
Yeah,
sure.
I'm going Hoka's.
Yeah, I can see that.
I just wanted to make sure I pronounced it right.
I think Tim's a Reebok dude.
No, definitely not.
Old school
He
white Reeboks.
He probably wears Adidas, but it pronounces it Adidas.
Adidas.
Just like Chuck. In either case, if you suddenly have, for instance, a trade deal announced with both Vietnam and India in the next few weeks, that's the type of certainty that I'm sure a person like Tim Cook would like to have so that he can go and spend a whole bunch of money on investing elsewhere. Would that be good for their profit margins? No, but it would build some certainty around where they plan to invest. And frankly, Tim Cook might already have that certainty because he probably has a lot more connections to the White House than Chuck's friend that manufactures board games. But for businesses all across the spectrum there, I think that's in part what they are looking for, too, is not only some progress with China, but just some degree of certainty that if I do move manufacturing to Mexico, to India, that I will actually know with some degree of certainty what I will pay to import that stuff back into the U.S.
So the big place where I think I land in all of this right now is we still have seen no data that reflects any meaningful economic impacts, mostly because most of the data we've been getting is from before April 2nd. So, for all the hullabaloo about, GDP data from yesterday, one of the things I said about it was, guys, this is backwards-looking data. It's still, even though it's GDP, the granddaddy of all data sets, it's still not really that relevant to what we are seeing now because companies are reacting differently than they were. Think about it
How much
this way.
information did it measure in April of 2025, Chuck? Zero.
Simple question on this. Does the decision made by a company on January 3rd of this year have any relevance to how they are making decisions now? And the answer is no, not really.
Not a lot.
As you got closer to April 2nd, sure, those decisions had more relevance, but there was still, a quarter's a long time. It's 90 days. And so I think that the data that we start to get now and in the next couple months is going to really tell us about what's going on in the economy because if we're being completely honest, none of us really know. Again, even the earnings reports we've been getting.
It's all about not knowing.
They're Q1, and most companies are saying, given the economic uncertainty that we're facing, we are pulling our guidance because, we can't project exactly where things are going to go. So I think that in terms of how this evolves, the next 2 months of data are going to tell us. But by July 4th, we're going to have a pretty good sense of where things are going. And there's a chance the economic data worsens. There's a chance that, again, no one's gone through this in our lifetimes. Maybe the economic data doesn't worsen. I'm open to that as a possibility, though I think it's unlikely. And we're going to see where things go. Maybe you get some trade deals announced. Maybe you don't. There's a ton of uncertainty the next couple months. I'm going to try to not say the word uncertainty anymore because I despise that word after the last 5 or 6 years. It's just one thing that we can't ever say is in these uncertain times. I forbid anyone to ever say that phrase again because we had enough of that back in March of 2020. But we're going to have to see how the next 2 months develop, and we're going to get some more information there. Let's take a quick break. When we come back, let's go talk about some of the economic data that we got this morning because we did get a few key pieces. We'll talk about what matters, what doesn't, right after this.
The global trade war has roiled markets, and a recession could be next. Keep it here for breaking business news and complete market updates on the Financial Exchange Radio Network. Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations or more information, go to visitusvi.com. That's visitusvi.com.
All right, I want to get some economic data. Before we do, I just had a couple items cross my screen. Again, just in terms of what we're seeing on price increases from companies as it relates to, again, whether it's because of tariffs or just using tariffs as an excuse, either way, like, it's happening, so who cares about the causality, but hint, it's probably because of tariffs. First, Kohler, the faucet and plumbing company, they announced a broad price increase that will be anywhere from 12 to 18% on their goods. Actually, I'm sorry. It is a 15 to 18% weighted price adjustment. They also, I guess, have other brands under them called Callista and Roburn.
Yeah.
I'm not familiar with them. Those are moving up by 12%, and these prices are effective May 10th. Microsoft this morning, in addition to announcing earnings last night, they announced price hikes on their Xbox consoles and games. Xbox prices going up 20 to 24%.
Wow.
Games, some of them are going to move up 14%. And so you have that happening.
Is that the new console or the current console? Or does it not disclose?
It says Xbox Series S.
I don't know if that's current.
I'm not a video game person anymore. I don't know.
Sorry. And it is primarily...
No, it is current because it says that these are price hikes from where it was.
And it's primarily manufactured by Foxconn in Shenzhen, China.
Okay. There you go. Other things. Lenovo, big manufacturer of laptops, their prices are up about 15% over the past 2 weeks. So this is what's starting to trickle in. Remember, if you have a 145% tariff, even if you decide to bring that good into the U.S., the cost to the consumer does not go up 145% in most cases, unless it is a direct-to-consumer product that's being shipped, like Shine, Temu, those types of companies, which is why you're seeing all of the ridiculous surcharges that they're adding now. Let's say that I am an importer of golf balls. I get golf balls that are made in China. And it costs me $1 per ball to import. It costs me another $1 to ship the thing to me, once it's in the United States. And then I got a couple dollars of, operational expenses related to selling it. So out of, I sell the thing for $5, I end up making $1 when it's all said and done. If my $1 cost from China goes up to $2.45, it's eaten through my entire profit. And so in order for me to make the exact same profit, I have to raise my price not by 145%, but by $1.45 in order to make that up.
So you're going from $5 to $6.45.
Correct. So you do the math out. It's a 29% price increase that I am passing through, assuming that my cost of goods sold direct from China is 20% of, my overall selling price.
Right.
If my cost of goods sold is lower, then the impact on my price is going to be lower. If it's higher, then the impact will be higher. But generally, when you look at, cost of goods sold coming from China, most businesses try to target somewhere between like 18 and 40% in terms of, where their revenue ends up being. 18 to 40% of that's a good benchmark for cost of goods sold. So yeah, like anywhere from like 15 to 35% price increases is what you would expect to see if a company decides to keep importing from China, given the tariffs that are being imposed.
So silver lining here, Chuck, we did receive the PCE price index yesterday, correct?
Yes.
Showed really good progress on inflation.
Good numbers.
Inflation was sitting at like 2.3% in the month of March based on this report, right?
Yeah, it was the monthly numbers were flat, both on core and headline. And the annual numbers, again, if you look both at what we saw for core PCE and headline came in at 2.3. The core came in at 2.6. So still a little bit elevated on that core, but look, 2.6 is quite honestly, it's fine. Like, it doesn't need to be 2%. I've been saying this all along. Totally fine if you land at, 2.6% long term.
So the good news is we are at a pretty reasonable starting point, both from inflation and unemployment as we go into this period of time. Like, unemployment's low. We'll get another jobs report tomorrow to confirm that, but unemployment has appeared to be, pretty manageable to this stage. Inflation has come down substantially over the course of the last 2 years, really. But to your point, when you see Lenovo laptops and hardware going into your home jumping up in price this significantly, it won't take too long to start noticing that in both, shopping online and elsewhere, as well as in inflation reports that we start getting.
Yeah. So you mentioned unemployment. Let's talk about that a little bit. And weekly unemployment claims data showed a jump from 223,000 up to 241,000. So it's an 18,000 person jump. The continuing claims moved up from 1.833 million to 1.916 million. So the question is, hey, is this something that is starting to show some signs of weakness and that's a problem? Or is this just some statistical noise that is happening and this is 1 week of claims and it's not a big deal? We're going to take a quick break right now. When we come back, we'll answer that question.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I mean, I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after a roller coaster month of April, May is starting off well in positive territory as investors react to major tech earnings from Microsoft and Meta, in addition to a slightly elevated jobless claims reading, in addition to other economic data points unveiled this morning. Right now, the Dow is up by 0.6% or 238 points. S&P 500 up over 1% or 62 points. And the NASDAQ up just over 2% higher or 353 points. Russell 2000 is up by 0.7%. 10-year Treasury yield is up by 2 basis points, now at 4.20%. And crude oil up 0.2% higher, trading at $58.58 a barrel. Microsoft and Meta are seeing gains after posting impressive first quarter results. Microsoft saw strong growth in revenue and earnings driven by its Azure cloud business and also issued strong guidance for the year. Microsoft jumping by 9%. As for Meta, the social media giant saw its sales climb 16%, beating expectations, and indicated growth would likely remain steady in the coming months. Meta up by 5%. Meanwhile, General Motors this morning cut its 2025 forecast for adjusted earnings per share and estimated a tariff-related impact of up to $5 billion. However, GM actually up by 1%. Elsewhere, McDonald's reported its first quarter results, posting a bigger than expected drop in quarterly revenue. The fast food giant's U.S. same-store sales declined 3.6%, marking its largest fall since 2020. That stock is retreating by 0.75%. Or 0.75%, excuse me. CVS up by 7% after its earnings and revenue beat forecast, where the company also hiked its full-year guidance. Tesla up by 1% after the Wall Street Journal reported that the EV maker's board opened a search for the company's next chief executive. However, Tesla has since denied that report. Apple pulling back by 0.33% after a judge ruled that the tech giant willfully violated a 2021 court order from Epic Games regarding App Store fees. Amazon up by 2% after the e-commerce giant announced plans to spend $4 billion by the end of 2026 in expanding its small-town delivery network in rural America. Speaking of those companies, both Amazon and Apple will report first quarter earnings after today's closing bell. I'm Tucker Silva, and that's Wall Street Watch.
So, in the last segment, we were talking about the weekly jobless claims data that we saw. And we noted that initial claims moved up to 241,000 from 223. Continuing claims moved from 1.833 million to 1.916. So first on the initial claims, if this is, the start of a move up, you'd say, okay, like there's, you're starting to see some problems develop if this were to continue for a couple weeks. But here's the thing. The underlying data shows that basically all of the increase in, I'm going to look at the non-seasonally adjusted numbers just because that's really where the meat is like what are we actually seeing compared to, prior years, since the seasonal adjustments can, take some things out in the wash. Yep. The non-seasonally adjusted numbers show a spike in New York State that went from 14,000 claims to 30,000 claims. The speculation, New York City schools were off, or New York State schools were off last week. Maybe you have bus drivers that file claims. You've seen a couple of these here and there, so it could be that. But why does it not get taken out in the wash? I don't necessarily know. So I think with that, Massachusetts, likewise, school vacation, same week, jump of 3,000 claims. It went from 4,800 up to 8,100. So
maybe there's something there.
From what perspective?
There could be something here from a not indicating much in the way of unemployment.
Yeah, I don't know that this necessarily has some kind of huge read-through on that front. The continuing claims is more interesting to me. And this is because basically what we're seeing here is a widening increase compared to this time last year. We're now up to about an 8.2% increase year over year in continuing claims, with the insured unemployment rate moving up a little bit as well from 1.2 to 1.3%. And so you still need a few more weeks to confirm this, but this is also where I think you would see the movement first, simply because if you think about how companies behave during periods of uncertainty, the first thing that they do is slow down hiring, which results in people having to stay on unemployment longer, hence continuing claims building. The second thing companies do, if that uncertainty persists, that's when they start laying people off.
So these continuing claims numbers, just for reference, are the highest they've been since the end of 21.
Yes.
And that's been a few years. We were still rebounding from the COVID layoffs at that stage of November 2021 when these were last reached this high. So, yeah, I'm with you there. The 1 week stuff, you got to wait and see. But the continuing claims are kind of a cumulative effect of unemployment in the country and what people are seeing on a week-to-week basis there. So I would agree with you. I would put a little bit more stress on that one. But we will get the jobs report tomorrow at 8:30, is it?
Yeah, and I don't think that I would expect to see too much of note. I think even though this is April data, remember that the time period for collection of the monthly jobs report data is usually right around the second week of the month. Second full week. So I think that the data collection on this one was the week of the 14th through the 19th. Remember, the tariffs were imposed on April 9th. So I think that if you look at this, were companies making any kind of quick decisions there? No. Quite honestly, I don't think unemployment's usually a lagging indicator.
Right.
I don't think you're going to see anything meaningful showing up in the jobs report this month, maybe even the next couple. I think that the first one where it starts to maybe have some signs is either June or July, but even more realistically, maybe August. It's going to be over the course of the summer where it potentially develops, if it's specifically in relation to tariffs. So
the previous month read on this, by the way, was 228,000 jobs created in the month of March. Expectations for this report are 133,000. That unemployment rate is expected to stay right at 4.2%, where it was previous month. So, look, I think if you get something right in that general area, I would say anywhere between 100 and 230,000 jobs created, then I would attribute to, a normal environment for what we would expect. Anything on the job loss perspective would be very concerning to me because I wouldn't have expected to see that.
No.
And anything above previous month's gains on employment, above 230,000, would be, again, surprising to me to the upside and a bit of a head scratcher.
Yeah. So I think that's what we're seeing from a jobless claims perspective. Anything else that you want to touch on? We got some ISM manufacturing data this morning as well. Another data set.
What is it, as bad as Dallas's?
Not as bad as Dallas's.
Okay.
It was still a deceleration from the previous one. It went from 49 down to 48.7, but not as bad as feared. The forecast was for it to come in somewhere around 48, so a little bit better than expected there. Key components, employment still under 50, so that indicates that employers in the manufacturing space are cutting jobs rather than adding them. Prices paid still very high at 69.8 compared to previous one at 69.4. So actually seeing companies saying, yes, our prices that we are paying for raw materials and inputs, they are still very high and increasing, and that makes sense. So I think ultimately, look, the soft data has now spoken and said what it said. If the hard data is what's going to matter the next few months, it's the soft data has told us businesses and people are nervous. Does it matter? The last 2 years
not at
says no, because soft data has not led to weakening hard data.
Mattered for elections, but not for the stock market or the economy.
Has the worm turned, and maybe this is a different economy now, and so the soft data matters in ways that it didn't for the last couple of years and is more in line with historical norms? Possibility, but we need to see how it develops. So forgive me if you're going to hear me saying this an awful lot. We need to see the next few months of data. By July 4th, we're going to have a much better sense of where things are going. And certainly by the end of July, I think we're going to have a conclusive direction for the economy and the market. Let's take a quick break. When we come back, do we want to do earnings?
Let's jump into earnings.
Let's do some earnings right after this.
Market volatility is at its highest point since the pandemic. Keep it here for the most comprehensive coverage of the global trade war. This is the Financial Exchange Radio Network. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this, so call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
Microsoft reported earnings after the bell yesterday, and I do mean like right after the bell. I think it was 4:01 p.m. when I got the alert on my phone about the earnings. And gosh, I understand why they wanted to put this out there quickly, because the stock is up 9% in trading today on the back of a really good quarter of earnings for Microsoft.
Yeah, there was really not... Did you find anything to complain about? Because revenue growth was 13%.
Margins were down a touch. That was the only thing.
Yeah. So $3.46 per share was the reported earnings. But their cloud growth was good. They were able to claim some AI contribution to that cloud growth, which investors want to see right now. I don't see a whole lot here to be looking at and saying, oh, I'm worried about this company in any meaningful way. I don't remember who quoted it, but somebody said that the word tariff showed up one time during the earnings release.
Yeah, it was a really good quarter by them. I mean, you go kind of across the board. We did report today that they are raising prices. By the way, that Xbox console that they're raising their prices on, do you know it's 5 years old?
The most recent Xbox kind of makes sense. Why do you need a new piece of hardware these days?
Well, I'm more mentioning that they're raising prices on a 5-year-old console.
Yeah,
like typically
That's
the way
why
that
I asked.
Typically the way that it goes is
get cheaper and
as you
cheaper.
have your new iterations, you cheapen the launch version, and this is just not the case. It's not what we're seeing there, and
Right.
I think again you can draw a direct line to where the thing is made, and also anti-competitive stances and things like that in the computer space. But that's neither here nor there.
So they didn't have much to say about potential impact of a recession or anything like that, and I very much doubt that that's built into some of their core numbers that they're projecting here. But nor do I think it should be, right? Like it's very unclear to me how their Azure business, for example, their cloud business, gets affected if we go into a recession. It's not as though it's not a whole bunch of upfront costs, and it's not as though Armstrong Advisory Group is going to stop paying Microsoft to store every piece of data that we own, even in the event of a recession. That is one of the last
things. Let's be honest, we're kind of stuck.
Correct.
Everyone is. Every business that exists out there is kind of stuck
with Microsoft.
This is why anti-competitiveness is kind of a problem, is when there's only one company that does this stuff. Okay, they have pricing power. So it's great if you're a Microsoft shareholder, but for human beings and stuff like that who aren't necessarily those shareholders, it can be, something that you have to deal with.
Folks, want to talk to you about the brand new guide from Armstrong Advisory Group for the month of May. It's all about trusts. And we talk about trusts on this program quite a bit when it comes to your estate plan. And specifically, we take the perspective of it of, okay, what does it mean for your personal finances when we talk about a trust in your financial plan? There's obviously a lot of different types of trust, but this guide's going to help you walk through what sort of priorities you need to be thinking about when you are developing an estate plan for yourself, whether or not you might need a trust based on your personal financial situation, and then when is the right time to be considering one, and when do they maybe need to get changed. All of this is contained in our brand new guide from the Armstrong Advisory Group. Again, the title, it's Trusts and Your Financial Plan. If you want a free copy, you can call us at 800-393-4001. Trust planning, estate planning in general, really critical piece of overall financial planning. And if you have questions about it, give us a ring, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Other big tech earnings yesterday. Meta, the company formerly known as Facebook, also had a really nice quarter, and their stock is up currently about, call it 6% and change. So obviously, again, good quarter and, better than expectations here. And sales came in at $42 billion. They also guided for a range of sales in Q2 that was pretty much, right around expectations. And I think the big thing that's kind of interesting here is they said that their capex for this year would rise from a range of $60 to $65 billion up to $64 to $72 billion. So it's about, call it like an 8 to 12% bump in capex spending. Now, here's what I think is what we need to try to sort through on this. CapEx spending in the last 2 years for anything in big tech relates to one thing and one thing only.
AI.
Artificial intelligence. And so NVIDIA is up in sympathy today by 4%, probably on the back that the read-through on this is, hey, we are going to be buying more AI chips. This also comes, Satya Nadella said that Microsoft was seeing, some excess demand for AI, and so they still thought they had to add more capacity over the next quarter or two in order to meet that. The question here, because Meta also said when talking about the CapEx, some of it was related to higher prices that they were going to have to pay as a result of construction costs and things like that. So the question that still is out there now is how much of this CapEx bump is because of them needing to buy more chips than they originally thought, and how much of it is because construction costs and things like that have gone up more than they thought?
It's a fair question.
And I don't know.
Right. The results from Facebook don't really surprise me, given what we heard from Google last week, which was, I hate calling them Alphabet and Meta, but Google and Facebook.
Can we just make up names for them?
Yeah, that's fine. But their earnings are pretty closely tied together because it's all advertising dollars. And so if we had seen some pullback in advertising, it probably would have shown up in Google's numbers as well. It didn't, and so I don't think Meta's numbers are surprising. But they're also, look, there's a huge difference between Microsoft and Meta in terms of how businesses spend, right? With Microsoft, you really have no choice. If you are a customer of Microsoft's already,
yes,
it's really expensive to leave them. There are not a lot of operating system alternatives, and if your data's there, it's a huge pain to move it elsewhere.
Yes.
Meta, Chuck,
quite honestly, there's not that many alternatives between Meta and Google. They've killed most local ad markets.
Agreed. But if you are facing pressure on your business, it is very easy to just pull back your total advertising spend these days because you are not tied into some 3-year contract with a local TV station to support that advertising for an extended period of time with Meta. It's, no, you pay for each individual impression, and it's a variable rate that can change, and there's no long-term contract generally.
Correct. So I think the read-through from Q1 in the tech space, everything looked pretty good. Like, there are no red flags out there. There's nothing that is an emergency. It's just, yep, we're continuing on our way. And this is even after some questions emerged in the second half of last year. I don't think those questions have been fully answered with regards to AI, but these are really good reports that at least, get partway there as far as answering them. Let's take a quick break. When we come back, we got hour 2 coming up in a bit.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit GoRedForWomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CMFM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Magens Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll
see you at practice this weekend. And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How do trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hour 2 on the Financial Exchange, and it's Chuck, Mike, and Tucker with you. We got stocks continuing to rally. Golly gee willikers, they just keep chugging along. I did a little bit of math, Michael.
Oh, yeah?
I did. Occasionally in my spare time, I like to math.
Some good old radio math.
I do enjoy mathing. If we stay positive for the day, which, again, barring any kind of catastrophic collapse, since the S&P 500 is now up 1.5%, the Dow's up 365 points, and the Nasdaq's up 2.5%. But barring any kind of collapse today, this would now be 8 straight days of gains for the S&P 500 since last Monday. So
pretty solid. Tuesday,
Wednesday, Thursday, Friday, and then Monday, Tuesday, Wednesday, Thursday. Now, this starts getting to the point where, again, like stocks typically don't just go up, and so you start saying, okay, where is this too extended? But stocks have not run out of fuel to this point, at least, and so you've had a really strong relief rally to the point where the S&P 500 is now just 0.5% below where it was, where it peaked on April 2nd, just before the tariff announcement. So pretty remarkable resilience in this market, and I think a good reminder of, hey, when you start getting nervous about, stocks, when they're down, selling everything when you're most nervous is not really the best thing to do. So it's not to say that, hey, you can't make adjustments here and there as you go, but when it comes to, pushing that button and saying, oh, I'm just going to sell everything, you never know what's around the corner. It could be good, it could be bad. Likewise, we're sitting here today right now talking like this. 3 weeks from now, the S&P could be at 6,000. It could be back down to 4,800.
Sure could.
I have no idea what it is going to do.
Agreed. But I think a few things are true. And this doesn't indicate, again, this doesn't indicate anything about the direction of the stock market in a few weeks. But I think it's important to contextualize. Most everyone out there has increased their risk of recession in 2025.
You project, like, if people who, quantify that stuff, you mean?
Right. People who do this for a living, economists or whether that's, research economists, whether it is economists at publicly traded companies and banks, pretty much everybody has dramatically increased their risk of recession in 2025. And that's just the context under which we are operating right now. Markets now at this stage, and that's another piece to contextualize, from their all-time highs ever, which were reached in February. Maybe you have this right off the top of your head. I'm guessing we're right around down 7% off of those all-time highs that were reached mid-February. So it's been, pretty wild path to get to that point because stocks were down about 20, but we're down single digits percentage points from those all-time highs.
I do have to say, like, the stuff that we are seeing in markets right now, again, I noted earlier in April, kind of as things were near the bottom, hey, like this, 2 and 3 day stretch is amongst the worst 2 and 3 day stretches that we've ever seen. We're also seeing some stuff now in markets that is stuff that I've never seen in the opposite direction. And not just stuff I've never seen, but like stuff that, again, doesn't really happen very often.
Right.
And so, like, just if you look at this as an example, not to get too technical, we talk about the VIX sometimes. It's Wall Street's fear gauge is how it's referred to. Basically, it's a measure of implied volatility for the S&P 500 for the next month. How much traders expect markets to move on a daily basis over the next 30 days. And you can't actually, like, the VIX is not an index that you can buy, like, just like most indices. You can't invest in it. In fact, there's no really reliable way to purchase it in any way, shape, or form. You can't do it. But what you do have are VIX futures, which basically help markets to price out where they think volatility is going to be in the future. The normal shape of that VIX futures curve, I promise I won't make this too weird. Normally, there is less volatility priced in today than there is in the future, meaning VIX futures are at a higher price than they are today. The reason being, you don't know what's going to happen tomorrow, so you price in more uncertainty later on. Right now, we still have a situation where the VIX curve is inverted, meaning it's pricing in more volatility now than it is in the future. This normally occurs like at or around market bottoms, just because you're pricing in the volatility that's happening right now with the assumption it'll get better. What's really wild right now, and this is data from Luke Kawa from Sherwood News. Prior to this stretch here, for the last 20 years, they changed the VIX methodology about 20 years ago, so I'm not going to go back further, and he doesn't either. But prior to this stretch here, the longest that we had ever gone, the most days in a row where the S&P was up with the VIX curve inverted, was 6 days. And it was back sometime in 2018. I think it was right at the beginning with Volmageddon when like a bunch of option sellers blew up and everything, and that was that. We're now closing in, it'll be 8 days, which is 2 days longer than the previous record that we've seen. So we're seeing some stuff that we ain't never seen before is the message here. I like
that you go through that complex explanation of everything, citing some pretty reliable resources about the curve of the VIX, and then summarize it with, we're seeing some stuff we ain't never seen before. That's just a wonderful mishmash of language.
I try to reach everyone. I want to reach the nerds. I want to reach the common folk. I want to reach everyone in between.
Like it.
And so you got to just, get yourself out there and just go for it. Let's see. Forget GDP. It's the jobs report that matters. That is the headline in the Wall Street Journal.
So I don't necessarily disagree, but this implies that GDP doesn't matter. Why do they argue it doesn't matter?
Who cares? Here's the thing. I'm not sure that this jobs report matters a ton, too.
Yeah.
Unless it comes in really negative. Because then it shows an economy that's already weakening in advance of tariffs.
Right.
Because this isn't going to capture tariff impact, because the survey for this month's job report, for the April jobs report, it was done the week after tariffs were implemented. Raise your hand if your company immediately upon seeing the tariff news said, great,
you're fired.
We're laying people off. No, most companies said, all right, we need to take a couple weeks to understand this, and maybe we'll pause some projects and slow down and reassess, what things look like. I've yet to talk to anyone, even people in directly impacted industries, who immediately said, that's it, 20% headcount reduction. Call it a day.
Right.
So I don't think that you're going to see anything shocking from this. And even if you do, quite honestly, it's just one report. The issue with it, if it is a weak report, is, okay, if you have a weak jobs report, and I'd qualify weak because I think the expectations are like, somewhere between like 100 and 150,000 is where most estimates are.
Correct.
I'd qualify weak as under 50, not 50 jobs, 50,000 jobs.
Right.
Just because generally there's a pretty wide range of revisions. So if it comes in at like 89, it's not
Close
a jobs miss. Like I don't consider that a miss. That's just within the margin of error. But if you come in at like 22,000 jobs, or even worse, like if you have negative unexpectedly, you kind of sit there and you're like, all right, so the jobs market was worsening in April. Is there anything that has been done since then that would improve the prospect for jobs in the short term? And the answer is a resounding no. Basically, every business survey that's out there is like, yeah, we're pausing hiring and we're slowing it down and we're going to take a little bit to figure out what happens. So I think that would be the concern is if you already have a negative reading here, there is no immediate catalyst for a bounce back. And do you start to see things spiral? The counterpoint to this is it's pretty unlikely that you get a reading that week just because weekly jobless claims have been low. You've seen a little bit of an uptick in continuing claims that we discussed.
Yep.
So that could, show some weakness here. But overall, there hasn't been any real shift in the data that we've seen in real-time indicators for the jobs market. And so it would be a pretty big surprise if you get a significantly weak reading here.
Tend to agree.
Let's take a quick break. When we come back, we'll do a little bit of trivia, and then we'll talk about Gen Z and their place in the labor market after this.
The global trade war is in full swing. How long will it last is anyone's guess. Keep it here for the most up-to-date information plus breaking news every day, right here on the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Magens Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. Cushing & Dolan are experts in estate planning. Their new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn how to make the right decisions to always protect your assets while avoiding costly mistakes, any one of which could have a dramatic and damaging effect on your financial strategy. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Don't take chances with the assets you've worked so hard to attain. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts and Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and you can register right now for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston. Time for trivia here on the Financial Exchange. And on this day in 1939, Batman made his first appearance in a comic book. Batman comics have sold over 480 million copies worldwide. There have been 11 Batman movies over the years. Trivia question today: which actor is currently playing the role of Batman? Once again, which actor is currently playing the role of Batman? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the fourth correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Piece in Bloomberg opinion today: Gen Z's hole in the labor market could soon grow. So, for those who aren't familiar with Gen Z, they are the new millennials. And by that, I mean they are now the young people that you can make fun of because they are young and none of us are anymore.
So leave us alone.
You're not Gen Z.
No, but people always blame millennials still, which is not accurate, and it drives me bananas.
I do feel like people just use the term millennial to describe anyone who's 23.
Yeah. Drives me insane.
Which is just not what it is. It's fine. Look.
No, it's not.
I eat my avocado toast proudly. I only drink the finest craft beers. I live in Brooklyn and commute to Massachusetts every day.
You have a beard.
I do have a beard. So did Grizzly Adams.
Flannels.
I'm actually anti-flannel, believe it or not.
Very tight pants.
I'm pro-flannel.
I used to be pro-flannel in my 20s, but I like something that's got a little bit more stretch as I get older, and flannels don't do that.
Just haven't found a good flannel, Chuck. That's all.
I've spent a lot of money on flannels, and I regret it.
Yeah. I feel like we honed in on hipsters here instead of millennials.
What's the difference?
Fair enough.
Sorry, continue.
Anyways, so here's the interesting thing that we're seeing. In the great financial crisis, in the aftermath of it, new college grads had an unemployment rate that was 1 to 2 percentage points under the national average. Exactly why, you can kind of speculate, but basically it was, hey, they were just coming out, like they were cheap labor. It was, they weren't coming from other positions and needing to, reassess. So they went out, they took any and every job that they could, regardless of the pay, and they generally were able to get those jobs.
I definitely feel as though my first job was doing work that was replacing somebody who was in their later end of their career.
And doing it for half the cost.
Half the cost. Probably not quite as well as that person that was doing it, but eventually I got there.
Sure. The interesting thing that we're seeing now is because of the way the job market is today, where there's not really much in the way of layoffs that's been happening the last couple of years, but also hiring rates have slowed down considerably as well. You now have a situation where younger people, college grads even, have a higher unemployment rate than the broad labor market as a whole. And so this is, kind of an interesting conundrum that is facing us right now because, look, I got to tell you, every week I see more and more companies saying, oh, we're doing, return to office, this and that. And all I see when I see return to office now is we want to lay people off without having to pay severance.
Yeah.
We want you to leave. We want you to get upset and be like, I'm leaving, and then actually do it.
Right.
And so I'm trying to figure out when this turns, but it's probably not until hiring picks up, which, again, you don't know exactly when it's going to happen, but you figure you got to get through this tariff, uncertainty first. Then the questions of, hey, did the tariff uncertainty cause a recession? You might be looking out to later this, Q4 of this year or Q1 of next year before the worm starts to turn on this, maybe.
Yeah, it definitely is a tough labor market out there for 22-year-olds and around that age demographic that have never worked before. If you graduated a few years ago and got that job, it's probably just fine. But if you are graduating in May of this year, it is a challenge. I'm trying to think of takeaways that, our generation had from graduating into the Great Recession. And you're right, it is different because at that point, the unemployment rate for that demographic was actually lower than the overall, but it was still considerably higher than even what I think Gen Z is facing right now. And so my main takeaway would just be when you get hit with a labor market like one of these, you kind of have to put your pride in your back pocket for a little bit and just do the job that you get, not necessarily the job that you want, which sucks.
Yeah.
Especially if you just spent $250,000 on your education, it sure would be nice to get the job that you want. That's just not always how it works out.
I did come across one statistic that I wanted to dig in on a little bit more here, which is I really need to actually click through the link on this piece. But the Bureau of Labor Statistics put something out called the American Time Use Survey. ATUS or ATUS for those of us in the biz. And here's the statistic I found interesting. I'll quote. Apparently, basically, men. Is it men? Yes, it's men. Men ages 15 through 24 spent less time playing video games in 2023, down from an all-time high of 109 minutes a day in 2022 to 88 minutes a day in 2023. Now, a couple things. That 15 to 24 demographic that they survey is, kind of a weird demo because it includes people that just started high school, but also people that have graduated college. So the interesting look, I don't know about you guys, but at my peak in high school and maybe even into parts of college, there was a pretty good chance I was playing 2 to 4 hours of video games a day.
Oh, easily.
And on a rainy weekend day, the entire day.
Yep.
I'm playing through 4 seasons of Madden in a day.
Sure.
No problem.
It's not even a question.
Just put some fans on the Xbox, it'll be fine.
Well, what's your point, though?
My point on this is just that I didn't know how much we played on average.
Oh.
That was it.
But
also that, hey, by the time I started working at 24, I went to playing 15 to 20 minutes a day at that point. And so I don't know how much of this is, hey, young men spent way too much time playing video games, as opposed to, okay, this is just capturing a bunch of high schoolers that play more video games now than they used to because it's more socially acceptable.
Yeah, but are they just taking that time and applying it to TikTok?
Probably. Could be, yeah. You know, it's if there's one thing that I believe young people should do,
waste a bunch of their time.
Yes, you
100%.
should. Like, it doesn't all have to be about work. Like, wasting time is how you kind of figure out, I don't know, lots of stuff, but whatever. Let's take a quick break here. We got the answer to trivia after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? It's not, simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
All right. Trivia question today was, which actor is currently playing the role of Batman? That would be Robert Pattinson. Tim from Westford, Mass. is our winner today, taking home a brand new Financial Exchange Show t-shirt. Congrats to Tim. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com. And I want to bring up a text in regards to our conversation on video games in the previous segment here, gentlemen. Text out of the 978 saying, and when you are over 70 years old, you will play even more hours of video games. I probably play 3 to 4 hours of Candy Crush Soda. There you go.
It's wonderful.
Is there a Lego Batman sequel coming out? Because I would have liked to accept Will Arnett for who's currently playing Batman as an alternative option.
Okay, well, that's why you don't run trivia.
I know.
Let's talk about McDonald's.
Yeah, let's go there.
They reported earnings this morning, and the same-store sales came in at a 3.6% year-over-year decline, which, couple things here. Like, there's a few different ways that you can read this. The first is questions that you need to ask. Number one, is McDonald's having trouble executing? Number two, if they are, where's the problem? Number three, if not, what's causing this? So I think it's some of both. I think they are having some trouble executing because the price competitiveness for them relative to other options, the gap is narrowing.
Especially in the most populated state in the country.
The gap is narrowing there.
Things I don't buy. Reuters reporting McDonald's global sales post surprise drop as tariff chaos hurts consumer confidence. Just no.
No freaking way.
Absolutely not. It's not what's happening there.
Absolutely not. Like, does anyone sit there in March of this year or in January of this year and go, I think there might be reciprocal tariffs coming in April. No McDonald's for me.
Definitely not.
No, like, no one does that.
What about weather?
What about weather? Do people eat less McDonald's when it's hot or cold?
I'm asking. Yeah, I don't know. We've blamed weather on a whole bunch of other things in Q1.
Drive-thrus.
I recognize all of that. I'm curious because I've seen it brought up that maybe weather was a contributing factor between wildfires, cold, flu season, etc. in the first quarter. I had a tough time connecting the dots there, but I mean, I hate to throw it out as an impossible theory.
Here's the thing. If it were weather, we specifically targeted February there, right?
Yep.
On the conference call, wouldn't they have just said, yeah, we had a bad February because of weather?
Probably.
We don't think this is anything meaningful.
Yeah.
They didn't say that, which
Right.
to me means that's not the case.
Yeah.
Because generally you try to explain bad numbers. So here's the other thing. If you look at U.S. restaurants and their comps this quarter that we've gotten, McDonald's down 3.6. Starbucks down 1. Chipotle down 0.4. Pizza Hut down 5. KFC down 1.
Where was Domino's? Domino's was bad too.
Domino's was up, I think.
Was it? Okay.
Domino's same store sales comps. Let me see. Domino's 2.7%. Oh, no, hang on. That's international. Let me see. U.S. growth lags. Hang on. I got a Same Okay. Here we go. So for U.S., it was a 0.4% rise compared to expectations of like a 3 to 3.5% rise.
Yep.
So I guess what I'm getting at here is these companies. I mean, like Chipotle, McDonald's, Pizza Hut, KFC, like they don't have a ton in common. They're different price points. They're different customers. Starbucks is an entirely different one as well. There's weakness across the board there. McDonald's is the worst out of any of them.
Yeah.
So a couple things that I think you can read through on this. The first is, hey, maybe you do have people, trying to front-run tariffs and stockpiling some goods. Maybe they're not eating out as much.
But again, if I'm struggling with financials, I'm going to McDonald's more.
Or you're cooking at home.
Except, what group is struggling with financials the most? Low income.
Yeah.
And that is right in McDonald's wheelhouse.
Yeah.
And so I think it might be some macro stuff combined with some execution there. And I don't know, again, none of us know any of this for certain, but there's a pretty broad-based trend that's happening with the food reporting that we're getting. And it wasn't good in Q1.
I mentioned California specifically. I didn't say California by name, but I mentioned California there in particular because remember the fast food minimum wage law that is in effect in California now. That price differential between like an Applebee's and a McDonald's, especially in California, right? Here, I think it's probably still going to be fairly different. But if you're going to go for a sit-down meal at some of these restaurants, sit-down restaurants that are trying to really drive value, that gap between a McDonald's in LA and an Applebee's,
With Chili's too, right?
Chili's and that, I'm using Applebee's as Chili's. I think was the story that we covered. That gap has to be really narrow right now.
Well, here's the question: is everyone just going to Chili's? Is that the answer? Because again, Chili's same store sales numbers they are the outlier. They were up 31.6%. on organic traffic growth of 21%.
That's where all of our customers went.
So what the heck is happening here? I mean,
well, they're offering a better burger at a similar price point, right?
So I do wonder
And
if
a
like
margarita.
this is the thing here is they've got this $10.99 meal deal that they're offering. And quite honestly, at McDonald's, you're probably somewhere in like the $8 to $9 range most times. In expensive parts of the country, probably close to $10 for a meal. Are you going to Chili's for $1 more? You might be.
Yeah.
So I don't know. Maybe everyone's just going to Chili's. Is that where they do in the first episode of The Office where they go to do the awards? Is that at Chili's?
The first.
It's a good trivia question.
The Dundies.
The Dundies.
You're referring to.
Dundies,
Yeah,
yeah.
I believe it was at Chili's.
I think it's at Chili's.
Yeah.
Yeah.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently two of their beaches, Trunk Bay in St. John and Mayguns Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the U.S. Virgin Islands has everything you need to make memories that will last a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Home builders piling on the discounts as they struggle to entice buyers. It's a headline in the Wall Street Journal. We talked about this when we got the home builders earnings reports that came out maybe a month or so ago, that you're seeing a huge uptick in the level of discounts that they are needing to push in order to sell these homes. And look, we got the data from the big home builders, but this is something where they have deeper pockets to be able to absorb this than small, home builders who might build, 5 or 6 homes a year or 2 or 3 homes a year. The ones that are building 20,000 a year, they have more cushion to be able to absorb, these kinds of things. But it points towards a difficult year for home construction at the moment.
Right.
And this is before you even get into margins being impacted by the cost of your materials going up.
Yeah. Look, the situation here is that the homes that are being built are in areas where a lot of people are trying to sell right now, and rates are not where they expected them to be this time of year.
Yeah. The data on this, by the way, the average sales incentive to move a home, 7.2% in the first 2 weeks of April. That's up from 6.1% in January. Let's take a quick break here. When we come back, we'll do a little bit of Stack Roulette.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by Margaritaville Resort Cape Cod in Hyannis. Looking for a great vacation spot? Look no further than Margaritaville Resort Cape Cod. Located just off Route 6, Margaritaville Resort Cape Cod is perfect for a weekend getaway or a fun-filled family vacation. You'll enjoy first-class accommodations and dining, our incredible Fins Up Water Park, and of course the gorgeous pageantry of the Cape. Visit Margaritaville Resorts, CapeCod.com for reservations and more information.
All right, I want to kick things off here because there's a great piece that I want to cover. It's titled, Visa Wants to Give Artificial Intelligence Agents Your Credit Card. It's in the Boston Globe. And it's talking about, on their earnings call, they were talking about this, and I'll just read a couple sentences here. Visa wants to give AI agents your credit card. Set a budget and some predefined and some...
Just got to tear the staple out here.
Sorry.
Set a budget and some preferences. And those AI agents, successors to ChatGPT and its chatbot peers, could find and buy a sweater, weekly groceries, or an airplane ticket. So, a couple things on this.
What?
I understand the idea behind this. I do get it because... Look, as much as I actually enjoy grocery shopping, there are plenty of people who don't, and there are plenty of people who don't want to spend the time doing it. Fair?
Yes.
So the idea of, hey, most people are not wealthy enough to have their own personal assistant doing their grocery shopping. Give, like, your general preferences to an AI bot and it does your grocery shopping sounds really attractive to me. The problem is, well, there are numerous ones. The first is, let's say that it buys something I don't want.
Who's liable?
Who's on the hook for it? Is it me? Is it the AI bot? Is it the interchange company? Is it the issuer? Like, who is it? That's problem number one. Problem number two is, okay, let's say that to get around that, you say, well, you have to approve all purchases. Well, then, am I basically just doing the shopping anyways?
All right, here's how it could be useful.
Because, like, what if I say, no, I don't want this? Then every time it comes back to me, I'm kicking back, like, no, 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 as opposed to me just going on the Macy's website and buying whatever I was going to buy.
Yeah, I think this is a dumb idea. Here's where I think it could be useful. AI could have the ability, for instance, to dramatically search the web rather quickly and find the lowest price, best quality item across a segment like grocery. So, hey, take me to Whole Foods, Walmart, and what's the big grocery delivery application? Shop. Anybody know?
Which one?
We were all using it during COVID. Instacart. Thank you. And, find me a grocery basket at the lowest price for these recurring items that I want. Or I do want that green sweater, so go find me, the cheapest one across all the different platforms and bring it back to me. The idea that it's going to, build their own cart and actually order with my credit card on file, I think is missing the boat. And frankly, it sounds to me a lot like Amazon's high hopes when they rolled out all of the Alexa devices that, everybody was going to start ordering in volumes way higher than that because, you can do it by talking to your voice assistant. And it didn't happen because people actually like to shop.
Right. Like you enjoy at a certain point, like some of this is just called being human.
Yeah.
And like you just, this would be like, hey, AI, show me like a picture of what it looks like from the top of Mount Everest. Well, you didn't freaking climb it, so you're not going to get the same thing. Likewise, there are plenty of people I know who, again, I'm not one of them. Well, I am in certain circumstances. I'll give you an example. This time of year, you know what I like to do on the weekends? I go to the nursery and I look around for, stuff to plant in the yard. I don't want AI to be like, well, the soil density says that this is what you should plant, and it's this time of year, and the light's at this angle. So, no, like, I want to go and talk to the person at the nursery and be like, hey, how's the garlic looking, Jimmy? Like, give me some of that,
Was anyone else's guest sit in a fold-out chair in his underwear and throw empty beer cans at cars?
No, that's not Sundays. That's Tuesdays. It's the middle of the week.
Okay.
What do you think we
Get
do
off
around
my
here?
lawn.
Yeah, come on. So, like some of this is just being human. Now, if you could get AI to sit in traffic for me, would love it. But I don't know how you would do that.
I'm sure Elon Musk is working on it.
But I don't want to sit in the traffic.
Yeah.
And the problem is I have to. So there's that. What else you got, Mike?
Google's not terribly happy with the Department of Justice's breakup proposal on the company. And for anyone hoping that the Trump administration's Justice Department was going to have a big pivot when it came to big tech, I think they are going to be disappointed. The proposal, just so everyone is on the same page about this, is for Google to be forced to sell their entire Chrome browser and then also provide user data like search histories to rivals, which... that part, I see why they need to go about it that way, but I don't really love the idea that Google would be forced by the government to sell my search history to a bunch of other companies. I don't love that Google has it in and of themselves, and I don't really want every other seller of merchandise to own it either, but these would be very extraordinary measures that Google would need to go through if they end up sticking. I'm sure it'll get watered down in some way, but that would be pretty substantial.
I would rather have more things broken off. So I've talked about my idea for the geographic breakup, which I know will never happen. But let's say you wanted to actually break Google up to the point where it can't put itself back together. Peel off Chrome.
Yep.
Peel off YouTube and YouTube TV. And peel off the programmatic ads business from search. 4 businesses: search, ads, streaming, and browser.
Yeah, they're not asking for nearly that much from Google.
That's the way I would do it personally. The giving, the needing to turn over the data from the search engine. I'm trying to figure out in what world that makes any sense. But it might just be that's the crazy ask from the DOJ, so they end up meeting somewhere in the middle, and just the Chrome browser gets spun off, and everyone looks like they met in the middle.
Mm-hmm. Could be.
Maybe that's it. So there's that going on right now. But, again, we'll have to see, what ends up happening there. Story that dropped from the Wall Street Journal last night that I got a chuckle out of. It was a Wall Street Journal exclusive saying that the Tesla board, sometime in April, opened a search for a CEO to succeed Elon Musk. The board and Elon Musk have now both subsequently denied it. But Wall Street Journal reporting it, they have some credibility on stuff like this, so I suspect there was something that was going on. Did it ever get to the point where, they were actually actively looking to do anything?
Engaging with search firms?
I highly doubt it.
Frankly, if you are a member of that board, I would be worried about getting sued by a shareholder if I'm not opening up that search if the guy hasn't been at work in 6 months.
The only reason that company both has value and or loses value is because of Elon Musk.
Agreed.
It's kind of wild, or at least has the value it does, because otherwise it's just another car company. We've talked about the margins and everything. So it's one of those things where even if you're on the board and you don't necessarily like Elon Musk, I'm not really sure that you can get rid of him.
Oh, yeah.
And still have the company continue to exist, quite honestly, afterwards. Just because, how much of your core customer base do you alienate just by the very fact of doing that? Let's take a quick break for the rest of the day. But tomorrow, big one, we got Jobs Report and Amazon and Apple report after the bell today. We'll fill you in on what they said tomorrow.